All right, so let's get to the serious part of 2023. Austin, I want you to help me with this because your eyes are better. And this is 25 years, 1997 to 2021. What is the black line?
That is the stock market.
And $100,000 in that 25-year period turned into what?
1.152 million.
Okay, so now I go to conservative Andrea. And Andrea, what's the red line?
Red line is boring bonds.
Boring bonds, okay? So it only made $350,000, okay? So why in the world would we ever have bonds in our portfolio?
Bonds help smooth out the stock market ride.
Right, and we're going to show people that. Our clients, on average, retired clients on that blue line, which is a combination, half stocks, half bonds, okay? Just a rough estimate. And that's a 7% portfolio over that 25-year timeline.
Yep.
But why have any bonds when you can make $1 million? And the answer is, going back to the tech bubble, Austin, how old were you in 2000?
Just about one.
Yeah, so you remember all of this, right?
Yeah, pretty clearly, yeah.
Stock market drops by almost 50%, okay? Your $100,000 in stock market goes down to $58,000, okay? That's when clients start getting upset. That's when people start getting emotional, making bad decisions. But thank God, half the portfolio has bonds because, Andrea, what did your bonds do?
Your bonds made a little bit of money.
Bonds made $26,000 in that same time the stock market dropped by half, okay?
Yeah.
It's your balanced portfolio. More recently, what do people always remember? 2008?
Yep.
Stock market drops 55% in 16 months. Your $100,000 goes down to $49,000, okay?
Yep.
Bonds are making money. They're that balance in the portfolio. Why are we talking about this? Because what happened in 2022?
Both went down.
They both went down, okay? That's not happened before.
Yeah.
That's why 2022 was the worst year since 1937. Brooke, that was the Great Depression. You remember that?
Yes, of course.
Yeah, it's literally the worst year for a balanced retail investor since 1937. And I made videos about this. You know, I blamed the government for some of the decisions they made.
Yep.
But the bottom line is, you can cry over spilt milk all you want to. Bonds are supposed to go up every single year. Maybe they have a bad year, like maybe they're down 1%. By far the worst year ever for bonds. I mean, that picture says 1,000 words right there. So
Yeah.
here we are. It is November 29th, 2023, and we still have customers coming in and saying what about their portfolio?
They still haven't made up what they lost.
We're not back to where we were. So this is the 25 years right here. We're not up to 1.1 million. Okay, no, you're not. But we're getting close because this is since 2022. So this is January 1, 2022 to yesterday. Okay, so Austin, has the stock market made it back to where it was?
Nope, just under.
It's close. Okay. And Andrea, have the bonds even come close to coming back?
No, they haven't.
Okay. We're working our way up. We're working our way back, and we're getting there. Okay. You'll recall that a year ago we said, what's 2023 going to look like? We said that the chances of having 2 years back-to-back bad years is very minuscule. Brooke, can you play that video from last year for me for a second?
Second thing I've talked about before in prior videos, it is very, very, very rare for 2 years in a row of stock market decline.
I have said, and I'll say it again, the important thing that we think about at Cyr Financial is that the chances of 2 years back-to-back, 2 bad years in a row is extremely rare. If you've been watching my videos, you know it's only happened 4 times in the history of the stock market.
And so we went into 2023, what?
Conservative,
But thinking that we were going to have a good year. And thank goodness we were right. We did not have 2 bad years back to back,
right.
and that's a good thing. And more recently, Austin, do you remember that video we made without Andrea?
Yes, I do.
It's a darn good video, wasn't it?
It was a great video.
Not because she wasn't here, though.
No, not that.
But it was a good video. And at the end of the video, Brooke, we said Santa Claus rally, right?
Mm-hmm.
Play that for me, please.
Have you ever heard of the Santa Claus rally, Austin?
I have not. It's a new term for me.
Okay, so it's well known that the fourth quarter stocks go up.
Mm-hmm.
It's well known that in the last 6 weeks of the year, they have the Santa Claus rally, right, Brooke?
Mm-hmm.
Brooke knows. You should know.
I like that.
We are going into our fourth quarter from a seasonality standpoint. That is one of the reasons why the experts that we follow are saying that it's been a bad couple of months, but it's going to be okay. The economy is starting to get back on its feet. Just remember this. When things are at their worst, that's when things start to turn around. When things are at their best, that's when stuff hits the fan. We have had a bad 2 years. Okay, we are finally getting back to what I would call square ground.
And so, Austin, yes, you do remember it, or now you know what the Santa Claus rally is. And ever since we made that video, that is exactly what's happened. I think that's going to continue to happen for the rest of the year.